You're saying, why has gold not gone up? Look, in the scheme of things, when people look at a long-term chart of gold, the fact that it's gone sideways for 10 years is immaterial. The thousands of years that gold has been around, and gold has been a store of value.
But that's over the period of the worst debasement that we've seen in the last 100 years, and gold didn't do it.
Right. So let's say gold all of a sudden has a year or two where it catches up and it goes from 1,000 to 5 or 10,000. Right. So it doesn't necessarily have to go there in a straight line. Gold could go up, go sideways, go up. Why did gold not go up higher sooner? Well, remember, it went from 300 to almost 2,000. It had a very big move in a relatively short historical period of time.
Gold prices rallied in Asian trading on Monday, reclaiming ground lost during July's downturn as investors turn their attention to the upcoming Federal Reserve meeting. Market participants are eagerly anticipating further signals regarding potential interest rate cuts. The precious metals ascent was bolstered by a weakening dollar, which retreated following Friday's release of critical inflation data. The latest figures suggest a moderation in U.S. inflation, potentially giving the Federal Reserve more latitude to consider reducing borrowing rates. The renewed optimism surrounding gold stems mainly from increased speculation about interest rate cuts, fueled by encouraging signs from the Personal Consumption Expenditures price index data, the Fed's preferred measure of inflation. Lower interest rates typically bode well for gold, reducing the opportunity cost of holding the non-yielding asset. PeterSchiff, a renowned economist and financial commentator known for his bearish outlook on the U.S. economy and advocacy for sound money principles, offers a unique perspective on gold's performance. Schiff highlights the metal's impressive climb from $300 to nearly $2,000 before its recent consolidation. He attributes the lack of further growth to investors' misplaced confidence in central banks and their underestimation of inflation and debt risks. While high interest rates have pressured gold prices over the past 2 years, increased safe haven demand has still propelled the yellow metal to record highs. This resilience underscores gold's enduring appeal as a value store during economic uncertainty. Offering a contrasting view, RaoulPal, a globally recognized macroeconomist, challenges conventional wisdom surrounding traditional and emerging assets. He questions the long-term value of traditional assets and the viability of existing economic models, prompting a rethink of established investment strategies. Please tune in to our exploration of PeterSchiff's and RaoulPal's analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
When do we look down and realize we're standing on nothing? And I think that applies to Bitcoin too. You look down and you realize there's nothing there. There's a lot of false perceptions that are going to meet reality in the near future.
Just as a side note, what happens, Peter, if all of these value assets that are going to catch up eventually and haven't done for the last 20 years don't? What happens if gold continues to underperform? What happens if your model of the world is outmoded? I'm not saying it is. Could you possibly consider that not everybody's wrong? It's just the way that you assume that everybody's wrong. I just find that a little bit...
I'm not saying everybody is wrong. I'm saying the people that believe in Bitcoin are wrong, but that's certainly not everybody.
And the market's wrong, and the technology price is wrong, and that your source of truth is the truth, and the market pricing's not the truth?
Markets get it wrong a lot. In the short run, it's a voting machine. In the long run, it's a weighing machine. And right now, I think people are making bad votes. And so I just think it's a mania. Every time there's a mania, right, it means assets are mispriced. We've had plenty of bubbles and they pop, and that's that. I just think that this is another one. So I think the onus is on the people who believe in it to try to say why this is different. Of course, that's the famous words of every bubble. This time it's different. I don't think it is. I think this time it's the same. And so I think that the same thing is going to happen. But as far as why, you're saying, why has gold not gone up? Look, in the scheme of things, when people look at a long-term chart of gold, the fact that it's gone sideways for 10 years is immaterial to the thousands of years that gold has been around, and gold has been a store of value.
But that's over the period of the worst debasement that we've seen in the last 100 years, and gold didn't do it.
Right. So let's say gold all of a sudden has a year or two where it catches up and it goes from 1,000 to 5 or 10,000, right? So it doesn't necessarily have to go there in a straight line. Gold could go up, go sideways, go up, and so, yeah, over a longer period of time, it's going to smooth its way out. Now, the question is, why did gold not go up higher sooner? Well, remember, it went from 300 to almost 2,000. It had a very big move in a relatively short historical period of time. And so then it went sideways for a decade. And the reason, I believe, is because investors have complete confidence in central banks. They don't believe that there's a threat of inflation out there or a debt bubble. And so they don't see the reason to buy gold. They would rather buy tech stocks. And so I think it's just people have a misconception. You can have a period of time where a lot of smart people can believe something that's wrong. And so assets can be mispriced as a result of that shared delusion. And I believe that's the situation with Bitcoin.
And what happened to me was actually the opposite, because I was the macro bear, that everything reverts to the mean, that it was all terrible, and it is all terrible. And I realized I had the wrong mental model. And the moment I actually freed myself of my own biases and tried to understand what the fuck was going on and why were these assets going up, why was this happening, I then could see what was going on and what the big game was. And as soon as I could see that, it became a game I could make money from, and that I didn't have to be stuck.
In today's global economy, most currencies are fiat, untethered from precious metals. This allows governments to increase the money supply through printing or digital creation, potentially leading to currency debasement. PeterSchiff warns that continuous currency debasement could collapse the monetary system and potentially trigger hyperinflation. This perspective highlights the risks associated with unchecked monetary expansion. RaoulPal offers a complementary view. He suggests that this growth can be illusory, while assets may appear to gain value as currencies devalue. Pal draws parallels to Venezuela, where the stock market soared in local terms but plummeted when measured in US dollars, illustrating the deceptive nature of asset appreciation during severe currency devaluation. Historical precedent lends weight to these concerns. Germany's hyperinflationary period in the early 1920s serves as a stark example. The German government's excessive money printing to meet financial obligations led to a catastrophic devaluation of the mark. Initially depreciating from 8 to 184 marks per US dollar, the currency's value eventually collapsed to an astonishing 4.2 trillion marks per dollar before Germany reverted to the gold standard. Let's get back to the interview.
I wanted to point out, you talk about the national debt. Official national debt is 2 trillion. But the actual national debt, the budget deficit they claim is 2 trillion, but the national debt is already growing at 4 trillion a year. That's the rate that it's growing already. And during the next official recession, it's going to be on an even greater trajectory.
So the issue is why we all agree, right? But I just don't think it can collapse. Why? Because of debasement.
But that is a collapse. That's a collapse of the monetary system. And it could lead to hyperinflation.
Let me just play out my thesis here, which is I don't disagree. You can't have assets going down 90%, the core collateral of the system, if they're debasing the currency, because they go up optically because the currency is going down. The Venezuelan stock market goes up in Bolivar terms and down in dollar terms, right? So therefore, if your collateral keeps going up, which is what they learned in 2008, is we can backstop the entire thing by debasing the currency quickly, the collateral goes up, and hey presto, my debts aren't so bad. Okay, magic. It's not magic, as you know. It's a sleight of hand. It's not pure magic. What they're doing is robbing you in a different way. Okay, this has happened before. This is exactly what happened in the 1940s and 50s. Saddled with massive debts after World War II, the large economies did the same thing. Financial repression, they had yield curve control, which is buying of government bonds, keeping interest rates low, which we've seen, and they just printed money. And over time, the value of the debt had eroded. And what they'd managed to do was create a productivity miracle, which drove GDP growth.
One thing you're overlooking, though, a key difference back then. So after the Second World War, and the government ran up a lot of debt during the war, But they did it. They paid for a lot of the war with tax hikes. They had tremendous tax hikes, particularly the income tax, which tripled when the war started. In fact, they introduced the withholding tax in 1942 as a victory tax. So before the Second World War, hardly anybody paid income taxes. By the end of the Second World War, a lot of people were paying income taxes. And when the war ended, the government had all of this income tax revenue coming in. And they initially, it was temporary to win the war. But when they stopped the war, they didn't stop the income tax. And so the government was flush with cash. And so it paid down a lot of that debt. Debt collapsed in the years because the government ran huge surpluses and paid down a lot of that debt. So it wasn't all just inflated away. Yeah, when the 1960s and 70s rolled around, there was a lot of inflation. But the initial big drop in debt was an honest repayment because we stopped spending money on the war. The problem now is we haven't cut any spending. We're taxing people to the hilt right now, and we don't have the type of economy. We had a real industrial economy in the 1940s. We had wealthy consumers that loaned money to the government, that bought the war bonds. We sold the war bonds to China. You know, Americans are broke. So we're a levered up country running huge trade deficits, and we have no means of repaying the debt like we did in 1946. So the debt is now going to go straight up. It's not going to go down like it did during those decades. We're just getting started. It's 125% of GDP. It's going to go to 150, 200%, 300%. It can't stop until everything implodes.
I don't disagree. I'm wildly, crazily bullish because I'm so bearish.
Bullish on what?
Assets. Because they're going
in nominal terms. In nominal terms.
Correct.
But in gold terms, a lot of these assets have to come down. Their real price has to come down.
Given the ongoing concerns about inflation, currency debasement, and the stability of fiat currencies, how do you see the role of gold evolving in the future as a safe haven asset? And with historical examples like the hyperinflation in Venezuela and the Weimar Republic in mind, do you believe that gold can still effectively protect wealth in the face of modern economic challenges? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.